let's just quickly glance at the markets. 10,611, up 1/3%, with the Sensex in the green by 136 points. There's a whole host of stocks that you should keep on your radar, and this is the show which tells you just that. We'll try and squeeze in as many names as we can, and for that we have our team of research analysts and Rajesh Palvia, who is joining in from Axis Securities on the technicals. Well, let's get started then with the first stock of the day, and it's clearly Yes Bank that's in focus, the top drag on the index, Mubina.
Well, yes, that it is. In fact, it dropped as much as 5%. This after, of course, the news that Chairman Ashok Chawla has now stepped down from his position as a chairman of the board of directors of Yes Bank. This is something that caused the scrip to plunge as much as 5%, and as you can see on your screens, it has only extended the losses. So now we're at the day's low for a Yes Bank, a little over 7%. Do remember that the bank said that Chawla had tendered his resignation as he felt the private lender would need a chairman who could devote more time and attention, while of course Chief Executive Rana Kapoor is on his way out, and the bank in due course will announce the appointment of a chairman post the RBI's approval. But of course the street, especially after Rana Kapoor's exit, is not taking this resignation very kindly.
Alright, yes, you can see that being reflected in the stock as well right now at the lowest point. Moving right on, it's some of those oil marketing companies that are in focus. And Rajesh, do you reckon that this sort of a move, or the underlying sentiment seems to be positive for some of these stocks? What is your take on the charts for BPCL?
Yeah, we have seen downtick in the crude oil prices, and then the same impact, the adverse impact we have seen in the oil marketing company, and all the oil marketing company has shown the uptake. The BPCL has given the breakout of its last 5-week consolidation mode. So now I feel that the gain will extend towards 335 to 345. One should hold the position with stop loss of 304.
Alright, that's the view coming in on BPCL. 314 is where the stock is currently at. Let's move on and chat autos. M&M in focus. Just let's understand what exactly has transpired. What did the management have to say, and how brokerages are reacting, Karanya?
Avan, first and foremost, we can see how the stock has increasingly recovered from the day's low point after the management spoke exclusively to ET now right in the morning. The problem is the fact that the management in the con call yesterday said that they are now looking at achieving the lower end of the target which they had guided for as far as the tractor growth is concerned, at 12 to 14%. Now they're a bit biased towards the lower end of that spectrum. That's something that's concerning the markets. Also the fact that a lot of people on the street are believing that the rural cycle may peak out very soon. Tractor volumes are also not, is something that the management seems to be a bit underconfident about at this point of time. But all of these concerns to a great extent were mitigated. The VS Parthasarathy was with us on the channel, and he said that they're just being a bit cautious. They don't want to overcome it and under-deliver, and that's the reason why they do stick to the range which they had guided for. But at this point of time are sticking to the lower end, tilting a bit towards the lower end. But overall he says that the growth prospects look fairly strong, and they are very confident of posting a good growth going ahead.
We have had 2 very good years of growth in tractors. This is the 3rd year in growth. So earlier we had talked about the overall growth to be in the range of 12 to 14%. We are still at 12 to 14%, and that's what is the industry guidance that we have. But within that, if you ask for a nuanced one, that are you more towards 14 or 12, then we can say that the bias is more towards 12 than 14. So we've not changed too much, but there is a slight bit. And if you want to kind of look at why that is happening, then we have to look at that 4 or 5 factors in the year beginning. When I talked to you, I talked about that monsoon, commodity price, fuel price, liquidity and forex. And if you looked at now where we stand, all of them not quite negative but slightly on the southward side. So in spite of this, I think the rural has done phenomenally well from that perspective, and therefore it's on the same vicinity, slight, instead of more biased towards 14, it's biased towards 12.
Alright, that's the take on M&M, but let's move on to another large cap stock, and that is L&T. Remember, when it came out with numbers, the management maintained the order flow as well as the revenue guidance. It was a very strong set of earnings. that were delivered, and now a lot of brokerages are showing a lot of confidence in the stock. In fact, today Morgan Stanley has a report. They're maintaining an overweight stance. They have a target at 1786, saying that the metro network rollout is going to be a $70 billion plus opportunity, and that L&T is going to be the biggest beneficiary of this metro opportunity. Remember, it's also been one of the key Diwali picks from a lot of experts, so the road ahead seems very strong and stable for L&T, currently holding out in the green. Well, let's move on to another large cap stock then, and that is Reliance Industries. What exactly is the sense that you're getting, Rajesh, based on the kind of moves that we've seen of late? There's been a lot of promise. Incidentally, this too is one of the top Diwali picks from our experts. Where are you seeing resistance, and is it a good time to accumulate right now?
Yeah, if we look at the structure of Reliance, the structure is on the long-term chart. Structure is positive, but since last 2-3 weeks we have seen consolidation in a very narrow range of 1050 to 1115 level. So on the near-term chart, 1115 is the important resistance area. Once the stock manages to cross this level, then it can resume its uptrend towards 1150, 1170 zone on the higher side. So my advice would be, whenever any dips comes near to the support area of 1050 is a buying opportunity in the stock. 1115 is the critical hurdle for the stock as of now on the near-term chart.
Alright, those are important levels to watch out for. Reliance Industries sure is in focus. Mubina, let's move on then and talk about a set of numbers. And United Breweries is in focus. It's been a pretty strong set.
That it has the third consecutive quarter of double-digit volume growth. 17% is where the volume growth has come in, and not just that, the second quarter numbers have been a beat on all counts, whether it's top line, the growth of which came in at about 22%, margins expanded from 8.1% to 9.6%, and the profits jumped a neat 75%. And you've got to attribute that to the fact that the interest costs have decreased substantially. Do remember, United Breweries wants to cut down its debt significantly by the end of FY19. These internal cash flows have been aiding the company to repay its debt and consequently cut down on interest costs, and that too is substantially aiding the bottom line. The stock, however, has come off from the day's high.
Oh yes, indeed. That's United Breweries for you, an all-round set of steady numbers. But quite the contrary when it comes to Motherson Sumi Karanya, and the street really seems to be punishing the stock.
Well, they are, because they're not really convinced with what the management has been saying, because they have been saying very similar sort of things in terms of their commentary, but have not really shown it in their financial performance for the last few quarters. And going forward also, they're seeing some pain, but the management is fairly confident that it's going to ease in the next 2 to 3, rather 1 or 2 quarters. But yes, the street is not happy at all. A lot of target cuts have come by. JP Morgan is neutral, target 190. BNP target is at 183. Nomura has a buy, but they've also slashed the target price to 197 rupees. So clearly they are saying that okay, the performance might get better, but they still are a bit cautious as far as the future growth prospects are concerned from here on. And that's why the stock is also down once again in trade.
Alright, keep an eye out. That's Motherson Sumi for you in the session. Let's move on then and focus in on Kohinoor Foods as well, and that stock is in focus largely on account of the earnings that it delivered. It's been a very disappointing set. In fact, the company put out a loss of 75 crore rupees versus a profit of about 1.7 crores last time around. Not just that, you have the revenue growth as well, which has come in quite tempered this time. So the top line growth has come in at 129 crore rupees versus 195 crores last time around. So clearly the stock is under pressure on the back of these earnings. Rightly so, given the fact that you also have the operating margins which have been very abysmal. Moving right on, let's take a quick break right here on the show and come right back as we have more stocks to flag on. This is Market Fatafat and we're getting you all of the stocks to keep on your radar. Let's pull up Ujjivan Finance. That stock too is buzzing away in today's session. Rajesh, let's understand where the stock is headed from the 232 mark.
Yeah, Ujjivan was, taking support at around 200 level, and after, today's move, stock managed to give breakout of 225 level on the daily chart. So, which is, very important level now. If it continues to remain about 225 level, then it can extend its gain towards 245 to 250, where one should book profits. So, 225, one should keep a stop loss for upside target of 245.
Watch out, that's the take coming in on Ujjivan. You can look out for a target of 245 to 250. Gaining traction as we speak, 7% on the stock. Moving right on then, Apollo Hospitals came out with its earnings. Mubina, walk us through the financials.
Well, not a bad set. It was a steady quarter. The pharmacy margins were a beat. The hospital sector, which is of course their mainstay business as well, managed to reduce some portion of its losses in the second quarter. So that as well is something that the street, I suppose, is taking a sigh of relief from. Not just that, additionally for an Apollo Hospitals, the company has announced an important, has made an important announcement, and that is with respect to its pharmacy business. There is a rejig in the business that they are doing. So essentially, Apollo Hospitals will own 25.5% in that, and the rest by investors. So Inam Securities will own 44.7, JLM will own 19.9, so on and so forth. And the slum sale to APL will be at a value of 527 crore rupees. Apollo Hospitals will be the sole supplier to APL. So that rejig as well is something that is perhaps giving some support to the stock price today.
All right, yes indeed it is. That's a good set of numbers. The management as well was pretty confident. NHPC meantime is in news today, Karunya, for the buyback announcement.
Right, the board of the company has approved a buyback of nearly 2.14 crore shares, which amounts up to almost 2.1% in equity at a price point of 28 rupees per share. They've set 30th of November as a record date for buyback, and the amount, the maximum amount of which they're planning to buy back the shares is 600 crore rupees. So on back of this particular news development is why the company is in focus today.
All right, there you have it. That's the take coming in on the stock. But let's move on then to another set of earnings, and it's Thermax in focus. It's been pretty strong revenue growth that the company delivered, up 38% at 1427 crore rupees. The operating margin though suffered at 7.7% versus 9.2%. The gross margins were down about 150 basis points, and the higher other expenses really impacted the operational performance. The consolidated order inflow was down about 4% to 1340 crore rupees. The PAT came in higher by 30%, and the order book stood at about 6,410 crore rupees. In terms of segmental performance, the energy segment grew 46%, the environment segment revenues were higher by 32%, while chemical segment was a bit muted. But the management was confident that they will see strong order execution and the chemical segment will recover. Let's move on from Thermax then to VIP. And understand, Rajesh, where are you placing your targets and stop losses here?
Yeah, VIP has shown very good buying interest at the lower level, but looking at the recent move, the stock is now moving towards its multiple resistance zone of 480. So my advice would be one should book profits around 480 level when the stock reaches to those level. Those who are holding the position at the current juncture, they should follow the stop loss of 450 for their long position.
All right, watch out. That's the level coming in on VIP. 4% are higher in trade. Meantime, Mubina, there's Alchem Laboratories as well. That's a newsmaker today. What's the reason?
Well, this time around, it is some news coming in from the US FDA. It's positive news. It's a sigh of relief that Alchem Labs can breathe. And this is on account of the fact that its sole important Taloja unit, wherein an inspection was conducted between the 8th to the 14th of November, has received the clean chit from the US FDA. So that means the inspection was more or less successful. The Form 483 had absolutely no observations. So that is some positive news and a relief coming in for Alchem and the Taloja unit.
Oh yes, indeed. The stock though is not reacting duly, but up at 0.7% in an otherwise quiet market. Meantime, Karanya, this is not a good set of numbers. Vodafone Idea losses have ballooned to 5,000 crores.
That's right, not a good set at all. Losses have come in the excess of 5,000 crore versus a loss of 1700 crores. So it has grown almost threefold. Revenue, however, has come in higher by 200 odd crore rupees. It's come in at 7,663 crores versus 7,465 crore rupees. Margin contraction is something to watch out for, 6% versus 20.1%. That's exactly why the stock has been plunging. Do remember, this is the company's maiden earnings announcement as a joint entity, and the company, Vodafone Idea, has also announced fund infusion of 25,000 crore to help it fight out the cutthroat competition within the telecom space.
All right, that's the take coming in on Vodafone Idea. No wonder then that the street is punishing this one 8% and counting. Moving right on to another stock that the street is punishing, and that is Page Industries, largely on account of a brokerage recommendation. Credit Suisse maintains an underperform rating. In fact, they slashed the target price from an earlier 26,000 to 22,000 rupees on the stock. Let's pull up Page Industries. They say that the company has seen the weakest growth in a decade, and that the biggest negative is that the volumes were flat on a year-on-year basis. They also say that the male innerwear trends look extremely weak, so going forward, it's going to be a rough road, according to Credit.